Hello and welcome to the next episode of the Mainstream Mortgages podcast. My name is Derek Vandell, and I'm joined today again with my business partners, Colton Boudreau and Peter Paley. Today's episode, we're talking about cashback mortgages. Have you heard of a cashback mortgage? If not, well, we're going to dive into details with it right now. So, first question, Colton, what is a cashback mortgage and how does it work?
Yeah, so a cashback mortgage is essentially a mortgage that provides you with cash back. Um, there's obviously stipulations and regulations to obtaining this mortgage, and the reasoning needs to matter as well. But a long story short is a cashback mortgage is providing you cash after closing through your mortgage.
Okay, so I can get any type of mortgage. Is this for, a purchase or at renewal? Like, what if my mortgage is renewing and I want a little bit of cash back from this program? Can I do that?
So it'll depend. In most cases, yes, I would say yes, just to keep it vague. But there are stipulations, like I mentioned, where certain terms and regulations apply. But for the most part, most people will be able to get cashback mortgage if they so please, and obviously, can afford it within their application.
Okay, so basically anyone who's looking to get a mortgage, they can, I guess, consider cashback as a potential option for them. So, Peter, uh, what does this even mean? Like, I can just go get a mortgage and then get cash for getting a mortgage? Like, where does that cash come from?
From the cash vary. It's actually the lender provides you the cash, but in return for getting the cash up front in your pocket, you're going to pay a higher interest rate for that privilege of having that cash back. So the lender provides it, builds it into your mortgage, but they build it into the rate. So if you're getting a cash back on a $300,000 mortgage, so that's 3%, that's $9,000 back to you in your pocket, but it'll be reflected in your rate, be a little bit higher. And each lender has different criteria for determining what those rates are.
Okay. So a little bit higher rate on the mortgage for cash up front, like cash in the bank right now. Okay. So Colton, what could a typical borrower use those funds for? Like, why would I want a cashback mortgage?
Yeah, so it makes sense to use a cashback mortgage when you need a little extra help with the closing costs. Maybe you have some debt that you want to pay off, high interest credit cards. What that might be, you're essentially borrowing the money off your mortgage at a lower rate to pay off that debt. It could help with moving expenses or, like renovations, furniture, whatever you feel you need it for.
Okay. And what about a down payment? Can I actually use the cashback for down payment on a purchase of a home?
No, you cannot. Cashback mortgages are for what I stated and not for down payment.
Okay. Um, Peter, how do lenders qualify borrowers for cashback mortgages?
Just like a regular mortgage, they're going to take the rate that they're offering you with the cashback, add the 2% for the stress test, like we have to do in Canada. And then if you qualify, it's the same exact qualification process as any other mortgage.
Okay, yeah, we just have to factor in the fact that the interest rate is a little bit
A
higher,
little bit
right?
higher. Yeah.
Okay. And what happens, Colton, if the borrower breaks the term of their mortgage? Do they have to pay that cash back?
Yes, they will be paying a portion of that back, and it depends on the financial institution. So put it into perspective. We had a client come across our desk December, January of this year, and they broke their mortgage with a financial institution, and they had to pay back the whole penalty. Or sorry, the whole cashback. So when you looked at the penalty amount, it was actually about $25,000 when you just added that back, and then the penalty to break your mortgage. It was quite substantial, and maybe at the time this wasn't our client up front. It wasn't explained to him, and it really impacted his numbers obviously when factoring in that cashback.
And it was the
Right.
big evil bank that promotes cashback mortgages and then has the people do lump sum payments on their mortgage with their cashback to lower the cashback interest rate and puts the client in a terrible, terrible penalty position. Our guest from a few weeks ago, Matt Imhoff with the prepayment penalty mentor has brought this up many times, and we've seen it cross our desks many times. One of the major financial institutions doesn't charge a prorated amount of the cash back. They charge you the full thing back, no matter when you break your mortgage. Like it's totally crazy.
Yikes. Yeah, so definitely something to think about if you are considering a cashback mortgage. You want to make sure that if you do have to break the term, that you can afford to do so, right?
Mhm.
Um, Peter, is this a good option for first-time home buyers?
It is, but it's just not for everyone. It's like all the tools in our toolbox aren't for every single person. But if you are someone who's maybe saved up as much as you can and you need a little extra help to get across the line, or you don't have all the money saved up for your closing costs and you don't want to do a flex down mortgage, and you're okay with the interest rate and the payment fits your budget, and you get this cash back to pay off your closing costs, legal fees, maybe buy some new appliances for a house that's in original condition. Like, I think these are great for those purposes as long as you understand the penalty consequence. And this could be the tool that prevents you from buying a house altogether or getting into a house now and getting on that property ladder.
Absolutely. And there is actually a mortgage strategy with cashback mortgages that you might hear from other mortgage professionals, um, where you can actually qualify for a little bit more of a mortgage if you use a cashback mortgage to pay out some of your debts. Right? It's only if you have debts that are kind of pushing your ratios over where a cashback mortgage would make sense to get you to qualify for more of a mortgage. That being said, it might not be all that much more. It might not even make the difference for you, but that's a little strategy that we kind of have in our back pocket as mortgage brokers in case, maybe you have an accepted offer to purchase and you just needed to stretch your budget a little bit more than you expected, and we can potentially offer that cashback option just to make sure that you qualify.
I mean,
Um,
just a few months ago, we never ended up using the cashback mortgage, but we had a client with a low balance on their auto loan, and the cashback mortgage would have totally paid that off and made the deal work. But we found a different solution. But I mean, it was definitely in our bag of tricks to present to the client, whose I think parents stepped in that case. But
Absolutely. Yeah, so I think this is a pretty short episode. That's all I've got as far as questions. Do you guys have anything else you wanted to add before we wrap it up?
I do. So if it sounds too good to be true, it usually is. And while this sounds like really great, you're doing a $500,000 mortgage and you're getting 5% cash back, like $25,000. That sounds great. But you have to keep in mind your penalties are going to be higher, your payments are going to be higher, and no one really knows what the future holds. But if you're someone who really is in a position that you just sort of can't get over the line to that home ownership because it's going to take you another year or 2 years to save up your down payment and closing costs. Meanwhile, we all know prices are going through the roof, especially the last 5 years. Like it might be a really good opportunity for someone to get on the property ladder. And I mean, every week in this business, we are coming across people who are declined by mortgage professionals, banks, credit unions who maybe don't have the experience or knowledge even of this program, or have lenders that offer these cashback options to people. So, I mean, it always pays to call us for your first or second opinion. Like, we'll give you the straight goods and we'll break down the pros and the cons of all the solutions that we provide to you. And, for anyone listening, especially our realtor partners or potential clients, like always call us. We'll always make sure that you get the best advice for your clients.
Absolutely. All right, so if that's everything, we will wrap up this episode. Thanks again for joining us today on the Mainstream Mortgages podcast. Again, my name is Derek. I'm with Peter and Colton, and you can call or text us at 431-482-2187, or you could email us at greatrates@mainstreammortgages.com. Have a great day.